Hello everybody, welcome back to another video, and by the end of this video, you guys are gonna be able to learn my Forex trading strategy that's maybe more than $10,000 days ago. And in this video, I am about to show you guys the key principles that I use to generate thousands of dollars each and every week of the month. Now, the principles I'm gonna be sharing is there are actually 3 important key principles, and these principles are actually scattered along the entire video. So make sure you guys don't skip any, because it's actually very, very important key information. For the very first principle that I'm going to be discussing right now is going to be the direction. The direction is the most important principle when it comes to trading. A lot of people always have that misconception that the best principle or the most important principle would be entries, but I myself truly believe that direction is the most important, because if you guys do not know where your direction is, or if you guys don't know where the market is going to be heading, you're basically just lost. You guys are actually lost. Okay, so now we're going to be looking into the principle right now. So if you're going to be looking into the charts right now, the most simple thing that you guys should be able to understand is that do not jump immediately to the lower time frames. No, do not jump to the 5 minutes and hoping that you can actually get your direction and hoping that you can actually get the market trend. Because if you guys are actually going to be looking into this one right here, like if you just jump immediately to the 1 minute and call this zone or like this entire sentiment that is actually bullish, but if you guys look into the 1 hour time frame, it is actually a very, very big steep to the downside. Now, the direction part is very important, because if you actually just go to the daily time frames, you can see that market structure is actually looking bullish right now. And if it doesn't look clean, if it does look a little bit too ugly, you guys can easily just go to the line charts over here. Now, when you guys press the line charts, you can easily see where the candle closings are, and in which you can actually take a look in this one right here. That market actually closed above that high, indicating that market structure wants to keep going higher. And you can see that this is the low and this is the high. So that means this is going to be your trading range. And you can actually take a look that this structure point where it created a breakout here, a lot of people would have this conception or like this misconception that the market structure is actually bearish now. But you have to understand that this break right here is only just a breakout. It is not a break of structure, because in order for the trend to start shifting, or in order for me to say that the daily time frame is actually bearish now, is when I see this lows getting taken out. So looking into this market structure right now, the next thing that you guys should have in your head is like, wait, if I knew that the daily structure is screaming bullish right here, you can see that market structure, the most recent breakout, which is buys, which is bullish, does that mean that you cannot take any short positions? No, you can still take short positions. Because why? Because look, if the daily created a breakout, obviously the market will need to do some pullbacks. If you see yourself a daily breakout right here, and remember, it's not a break of structure, that means that you can always jump to the lower time frame, such as the M4, to start capitalizing for a potential entry. Because even though daily just gave us a breakout, not a break of structure, the H4 gave us a different story. And remember, the daily is such a big time frame. If you're always basing your entries on the daily, it can take you weeks. It can take you 3 weeks, a month before you can start taking an execution. So if you're going to be moving on, the most important one for the main foundation of the entire principles I'm going to be teaching you guys is actually the foundation, which is direction. Direction is very, very important. So if you guys are going to be looking right now, since we knew that daily structure was extremely bullish, now if you're going to be looking into the H4 time frame, it does look bearish. The market structure is bearish. Why? If you guys take a look over here, you can see that there is actually double market structure break. This high was able to break this low, and was able to break this market structure low. And you guys should be able to understand that a wick chart, a wick breakout is actually the best breakout, right? If you have a candle closure under the wicks, that makes it a lot stronger. But if you guys are just basing on the candlestick closing, for example like this, if you guys go to the line chart and you guys have a breakout like that, that is totally fine. It is okay. But you have to understand that it is much more, or it is much stronger if you guys do have a wick break. And you guys should be able to understand that the most important where wick break, okay, like where the candle closure under the line chart is also the strongest, is when you're on the time frames on daily above. So if you're inside the daily, weekly, and monthly, if you guys do see a wick breakout, then I would say that that break is still pretty strong. It's still pretty good. But if you see like a wick breakout, I mean, if you guys do see like a line chart breakout in the M1, but there's a long as wick, then I would say that that's kind of a little bit dangerous. Okay, so now we're going to be moving on to the next principle, which is principle 2, which I myself would call it a scale. Now, what does scale actually mean? I'm sure that not a lot of people are actually talking about this, which is the scale in, scale out. Well, this tip is actually the most important thing when it comes to finding your entry. Because why, right? When it comes to finding your zones, okay? If you guys guys take a look, I'm sure that a lot of you guys are, when you guys are actually using TradingView, if you guys are zooming in, you immediately just use this one, you just do this, and then when you zoom in, you know, like it kind of just messes like the structure of the charts. So the thing that you guys want to be doing is, once you guys are able to pass principle 1, which you guys understood your market structure already, that you guys are already knowing the direction of the market, which is daily, the next step that you guys want to be doing is you guys want to be going to the charts. Since you know the daily already, you know the higher time frame directions, you guys want to be going to the H4 or H4 lower to be finding your zones. You want to be right clicking and pressing this reset chart view. Okay, now once you guys press that, don't do anything. Okay, you wait, and you guys just want to be scrolling in. That's it. You guys just want to be scrolling in. You guys don't want to be pressing this thing right here, because you can see that it messes up the market like highs and lows. Okay, it messes up your market trading range. Okay, now this is actually a really good tip that I can tell you guys. I don't think a lot of people are actually mentioning about this one, and I can tell you guys it is actually a game changer. It's actually such a game changer. This is one of the tips that we actually share inside Surge Notify, in which I myself is actually sharing to you guys in this YouTube content, or in which I'm actually sharing to you guys, or one of the many secrets inside Surge Notify. So if you're gonna be looking into this right now, if we guys are gonna be going back, you guys just want to be pressing reset chart view, and once you guys press reset chart view, you guys just want to be scaling in. Okay, that's it. So once you guys scale in, and once you guys already do know that the market structure is extremely bullish, because if you guys take a look into the daily, it is bullish, but then we got ourselves a daily breakout to the downside, but it's not a break of structure. But remember, we can always capitalize that in the lower time frame. So looking into this one, we can always go to the H4. Okay, onto that H4, we saw that we did have an H4 breakout over this low with a candle closure, and we also do have this wick right here. We have a candle closure. Now remember, you got to be using your scale in tool. If you guys scale in over here, you can immediately see that you can see where your highs and lows in the market, right? You guys don't want to be scaling all the way here. Obviously this is going to be your highest, but make it logical to the point that you can actually see that where the market is actually heading, or you can actually see that the market structure gets pretty clean. Now if you guys look into this one right here, you can see the market structure is looking very, very clean now, right? This one screams your high, and this one would obviously scream your low. Now would you say, I'm sure you guys are going to be asking me the question of, would you guys take an entry here? Yes, I would still take an entry here, but you guys should understand that this entry is going to be dangerous. Okay, I would say that an entry over here is much more riskier than here. Why? Is because this is going to be the in-between structure, or it's going to be the roadblock. Because why? This is going to be the highest point, which I would call the last resort, right? And obviously this is the lowest. Now this is going to be in between structure, which I would call, quote unquote, the roadblock. Now if market fails to respect this level, the market is just going to keep going higher. If the market fails to respect this supply level, it's going to keep going up here before the big short down. That is why I'm saying that it is risky, because if this level fails, you technically took an L, and your next point of interest to take an entry is right here, right? Because if you guys just waited for this high probability zone, you guys can only take entries once, right? You guys can take an entry here, and then if market fails, that's it, right? It's a change of structure. While if you guys are actually always taking an entry here, or like if you guys are taking entries on roadblocks, take an entry here, you take an L, for example, you go here for a last supply zone, and then you guys take an L, then you would take 2 losses. But you guys should understand that trading is a probability game. There's never ever 100% win rate out there. Okay, what matters when it comes to trading is your risk management and being able to understand the key principles, in which I am actually sharing with you guys right now. Okay, so understanding where your highest and lowest, you guys are going to be able to mark your zones. Okay, this is obviously the highest point of interest where you can actually start taking or start looking for entries. Now we're going to be moving on to the next principle after this point right here. So the next principle is actually principle 3, which I would call entries. A lot of people would usually call it as principle 1 as their entries first, and they would just completely neglect direction, which is actually very wrong. Principle 3 is going to be your entry. Now once you guys have your zone, the next thing that I always like to do is I always love to refine it. And let me give you guys some tip when it comes to refinement, because I'm sure that you guys are constantly going to be looking for a zone which has a very, very clean imbalance, right? If your zone doesn't have any imbalance, you don't take it. Okay, now let me explain to you guys this real quick. Now if you guys have a zone, right, remember that this is the highest right here. If you guys are going to be scaling in lower, okay, and if you guys don't see any zones with an imbalance, for example this one right here, you do not see any imbalance as well, or anything at all, even when you go to the 5 minutes, no imbalance, do not ever go to the 1 minute when you're refining your zones. Don't do that, especially if your zones is in the H4. You guys do not want to be going to the 5 minutes, I mean in the 1 minute, trying to refine that. Don't do that. Okay, so you guys maximum 5 minutes, if you guys don't see very clean like supply zone in the 5 minutes, the things that you guys can actually do is understand what the zone is telling you. Because remember, this is a H4 key level, an H4 supply point. We're gonna be refining this level. You guys are gonna be going until you see a breakout. So into the M30, you can see that market structure actually gave you a sweep onto these highs, a breakout onto these lows, and we can actually see that market did a breakout, did a pullback, and did a push much lower. Now, once you guys have something like this, the most important thing that you guys can actually do is start refining your level, okay, over that point. Now, the question is like, hey, why can't you just take, you know, like basing onto that fill, right? Like a supply chain where first entry here and it drop again, another entry right here, right? Can't you guys just be following your supply? No, this is the sauce that I'm gonna be sharing you guys. Make sure that it is only gonna be used twice. You don't want to be using like 1, 2, 3 and you want to be taking entry there. No, you guys, for me, my maximum is only gonna be twice. So 1, right, this first breakout, this first high pullback, this is gonna be the 2, and I'm gonna be waiting for an entry around this level. Okay, I will be waiting for an entry over there. I will not wait for an entry here because that's a little bit too far already. I will be waiting an entry for the 2. Now, moving on, the next thing that you guys want to be doing is after you guys identified your zone, because this one is very strong, liquidity being swept, we got a breakout and market pullback. You guys can start refining it basing on this one. So you can see that we do have this zone right here. You can even refine this even more. So for example, this one right here, right? You can even just refine it to this if you want, and now you can start putting your entry. What I really love doing is I don't always wait for confirmations. I immediately just set my limit entry and then take my execution. Because if you guys can take a look over here, this is why I would say the principle 3 would be called as somewhat as like the last part, because it increases your probability the most, because you're able to identify your scale in, you're able to identify your direction to the point that if you guys take your entry, it'll be very good, right? It will be like much lesser risk. Okay, but here's the thing, remember my SL was like around 40 pips right here onto this zone. There is actually another tip that you guys can actually use if you guys wouldn't be doing this one. If we got our first entry right here, this is the next time that if you guys decide to take confirmations, you can actually take it. But I myself love to take my first entry. So after we have our first entry right here, the next step is we did have a simple market structure confirmation. We actually got ourselves a breakout here in the line chart. Okay, we got ourselves a breakout here, very clean. Once I have the idea of a breakout, the next thing that I'm gonna be doing is looking for an entry. I'm sure that most of you guys are gonna be looking for an entry over here, and obviously you guys are not gonna be looking for an entry over here, because why would you guys look for an entry over here when there's a really clean imbalance? Let me explain this to you guys. It's all about logic. You guys shouldn't just be taking zones just because they have imbalance. Okay, you guys should understand the price action, why the market would love or would prefer to be taking that level. So now during this time, where would I take my scale in? Simple. That's the most simple question I can answer to you guys, is actually just wait. Now if you guys can take a look into the pattern right here, it kind of did this and a breakout. If you guys will wait all the way up here, you can probably do that to have the most sniper entry, but you have to understand that the market really loves to respect left shoulders. They really love respecting left shoulders. Like, that's one thing I can say, especially for gold, they love respecting left shoulders. So what I did over this time is you guys should just mark your left shoulder right here, okay, probably this one right here, and you can have your next point of interest for an entry right here for the next scale in. Now you can see what happens. It's like you're like, wait, I kind of missed an entry here, you know, you're like, oh, I did miss an entry, you know, that kind of sucks. But you have to understand that this is gonna be the time where market is actually just generating liquidity. I was looking at this point of interest, I'm like, wait, I know that this is gonna be the left shoulder. Yeah, we got principle 1 down, we got principle 2, we got principle 3 for our direct entry, and now we're inside that next, still inside principle 3, but we're actually looking for scaling in for the position, for more position. I was very optimistic. I'm like, okay, you know what I'm gonna be doing? I had my first entry here, this is gonna be my next entry. You guys are gonna be waiting this out. You can actually see the market went all the way down and then pump up again, give us this very clean entry, and then market pump to the downside. Very clean, very simple. Because look at this, your first exit is obviously, you know, most of the time it's gonna be 3R, minimum 3R. You scale your positions here, market pumped up, immediately tapped your left shoulder and started pushing all the way to the downside. This alone closed you 6R in a single day. Okay, why? You're able to close this amount of RR just because you're able to follow the 3 principles that I shared with you guys. Now this is the only thing that I want to be sharing with you guys, and if you guys do want to see more contents like this, make sure you guys smash the like button, make sure you guys like the subscribe button, and make sure you guys actually turn on the notification bell so you guys are gonna be notified when we're gonna be dropping exclusive bangers like this for you guys. And I'll catch you guys in the next one. Bye bye.